What if I tell you successful trading has nothing to do with how much time you're spending looking at the charts? Most traders believe that the more screen time they have, the more successful they'll likely become. But in reality, that actually leads to more stress, pressure, and overall worse performance. The truth is, you can actually achieve consistent results just by spending 15 minutes to 2 hours per day trading. If you do it right, that is. So in this video, we're gonna break it down into 3 parts. The first part being the traditional style of trading versus a 15-minute approach. Second one being the strategy that you wanna use in this approach. And third one being why less is more. So many traders actually suffer from this tendency we call overtrading. And overtrading generally comes when the traders is spending way too much time in the market. And when they're overtrading, a few things may come from this. Number 1, stress, inconsistency, burnout, which would all affect your trading as well as your personal life. Because when it comes to overtrading, the more time you are spending in the market, the longer you will be fatigued. Our brain can only work at full capacity for that long. So if we do cross the threshold, any decision you make is not going to be optimal. And in the markets, it's really crucial that every decision you take is the optimal decision. And if you're not really being disciplined with your time and you're just looking at the markets 24 hours a day, it really opens up the door to inconsistency trading. Because you're in the markets all the time, you may find yourself jumping from one setup to another setup, from another setup to another setup. And with all that said, the burnout that comes from this is gonna be insane. You will be much better off working at your 9 to 5 than actually going into day trading. Because sometimes I would see traders spending a full 12 hours looking at the charts, some even 15 hours, and I have personally seen people who spend 24 hours looking at the chart, just sleeping a few hours here and there in between. That's not something you want to do. Now on the flip side, if we look at a trading routine, which doesn't take you more than 15 minutes to 2 hours a day, you will be able to have a lot more focus because it's just that very short time span where you have to really focus on the markets. Not to mention that you will also have less emotional influence because when you step off the charts, you're immediately detached from the markets. You have more free time. Now, when I say free time, doesn't mean you want to go to the beach and take a sun bath. With more free time, you can spend that time on backtesting, studying your strategy, optimizing your trades, so on and so forth. And then lastly, this helps you create consistency, right? In trading, everything is about consistency, not just within trading itself. When you build your life around trading, you need to have consistency. So if you spend only 15 minutes to 2 hours per day, you can ensure that there is a consistency in your routine. And with that consistency in routine, it's gonna help you with the consistency in your trading. Man, that's a lot of consistency in a very short time. So with all that said, you need a proper strategy, a proper approach to do this technique. So let's jump onto the charts. Now, when it comes to day trading and making sure that you're spending only limited amount of time in the market, you wanna make sure that you're always trading in a highly active market, okay? At Urban Forex, we actually use this technique called the cheese trade. So what that means is you want to see a strong trending market, right? And in the active market session, if you do see strong trending market either to the upper side or to the lower side, you want to be able to catch a piece of that move. That's why we are saying we're taking a slice of cheese from that move, the cheese trade. And how this cheese trade actually works is, going back to my first point, you first want to make sure that the market is active. So there's 3 steps involved. Number 1, making sure that you have the session's high and low marked. Number 2, making sure that you have a session breach. Number 3, waiting for the pullback and getting in. So let's look at this example right here. Now, what I'm looking at here is the Euro USD. Some of you guys call this the fiber. What we have here is the high of Asia, which is right around here, and the low of Asia, right around areas like this, okay? Overall, this is the high, this is the low. What you want to see in the next market, so the market that opens after Asia is London. what you want to see is a breach, a strong breach through that area to show that there is activity in the market. Okay, so what's gonna happen here is, so you can further finesse this area to this high and this low. And ideally in a situations like this, because we are in an uptrend, you wanna see activity resuming to the upper side. That tells you the bigger players are interested for a buy, and you just wanna get on board to take a slice of the move, all right? So if we step forward here, we see a move to the upper side. Okay, so we have two steps completed here. We have marked out the session highs and the lows, and we have seen a breach above the session high. And this breach happens right when the London market opened. If you really want to keep track of the market sessions, I really would suggest checking out the Market Countdown app that tells you exactly when does the market open and closes. So once we have the two steps done here, so the next thing you want to look for here is a pullback. That's the final piece of the puzzle. So let's step forward a little bit here and let's go down to the lower time frame. Assuming 1 hour has gone by here, you're still not doing anything, you're not actively trading, you're just waiting for a pullback. And when we're looking for a pullback, we generally want to do that on the 5 minute. Okay, so the classic way of looking at this with the Urban Forex strategy is by fading the momentum of the pullback. So we have a strong pullback coming in, another strong pullback coming in. Everything still looks very, very hot on the sell side. We want to make sure the buy side looks hotter than the sell side. So at this point here, once we touch this STINU, the previous session high, we see a strong rejection back up, right? So at this point, it does look like the buyers are getting interested, and look at these move here. Now, what we're looking for here is to see the buyers overpowering the sellers. So you can see sales are coming down very hot at this stage, and this stage. Okay, if we are looking at how far it traveled and how strong each candlesticks are, it all looks stronger than the buy side. Stronger here as opposed to this is stronger opposed to this. This is fairly strong as opposed to any buyers that were appearing here. But finally here, the buyers were overpowering them. But that's not where you want to get in. You want to wait for additional confirmation. So what we have here is sellers are still giving it another go, but look what happened. Immediately rejected. At this stage, it looks pretty much ready. You just want to make sure that things are still holding here, not going anywhere before getting in. Okay, and because price are indeed holding at this area, showing no more signs of sellers coming in, that's actually an area where you can get in. So let's go for a buy at this area here, and let's put our take profit at the recent high. For the stop loss, a rule of thumb would be to keep it around the recent low and then taking it up to the recent high. This is a very basic technique taught in the Urban Forex courses. There's a lot more different ways of tightening your stops, but I want to show you what you can do with this quick approach. So let's see how far this thing can travel. Okay, we immediately see a lift off. What you really want to see here is the big boys, which is the uptrend, resuming the move up. As soon as you can see that, the candlesticks are all towards the upper side now, you have a very high possibility of going to the upper side. And there you go, we reach target. So very quickly, we do reach profit, and you can see we're not really spending a lot of time here. From this point here to this point here, it's no more than 1 hour. So you're really taking very quick in and out approach. You may be out having lunch, and by the time you finish your lunch, you're at your profit target. So I'm back at the 60-minute time frame now. As you can see, this was the entry we had before, and this is where we got out. A very quick in and out move. Now let's look at another example where you can also do the same approach, which actually happens the day right after. So you can see again, I have marked out the highs of Asia, which is this bar right here, and the low of Asia is standing around areas like this. Okay, so we have the highs and lows marked out. What's the next step here? We want to look for a session breach. Now this session breach here happens. Okay, we broke Asia high. This is at Frankfurt Open, still one of the biggest market out there. So we can say, in fact, that there is bigger players around looking for the buy. And let's see if we can get a cheese from this trade. Now let's look for a pullback. We see a pullback coming in here. You do not need to go any further. Let's jump right to the 5-minute time frame. Again, the thing that you're looking out for here is to see the momentum slowing down on the pullback. Each step along the way, sellers still look stronger than the buyers. Sellers moving down fast, the buyers still looking slow. We want to see when does the buyer overpower the sellers. Even at this stage, we still see sellers are looking fairly strong. You're not doing anything at this time. You want to wait. A big part in consistently profitable trading comes in patience. So let's see when does the buyers appear. All right, at this point, we do see stronger buyer, much stronger than any of this before. Okay, I'm still looking for a little bit more data here, preferably a little bit more hold. Okay, here it may look like it has went, but now we can clearly see the buyers are a lot more stronger than the sellers. But it doesn't mean that you have missed the trade. If we do see a test coming in, it's still something we can take. So we are seeing a test coming in after this V formation. For those of you guys who know the concept of V formation, if price is holding, that's where we want to get in. Okay, price is definitely holding here. We do see strong rejection from the buyers. This is the perfect spot to get in. So I'm gonna hit the buys here, and this would be how our trade would set up. A buy from this location, stop loss here, taking it up to the recent high. All right, so let's see how long this trade will take to perform. We have a very quick resolution to the upper side. That's what you wanna see. A little bit of stalling, and then not really there yet. Okay, there we go. All right, so again, this does not take long. We got in at around 9:15, let's say 9:15, and then the target around here was around 10 p.m., which is almost less than 1 hour. A very quick resolution, just getting in and out quick, all right? You do not need to spend too long on the charts. Okay, so let's look at one more example. I have here the dollar CAD on the 1 hour. Let's first mark out the session highs. So what we have here is the London session high, which is right around here, and the session low, which is right around here. So these are the session highs and lows, and because we are in an uptrend, we want to ideally see a session break to the upper side. So let's see if we get that here. We move along and we have a session breach. So we have broken the session highs here, and what's the next thing that we're looking for? We're looking for a pullback. So again, you do not need to go far. Let's jump down to the 5-minute and let's wait for the pullback to slow down. Look for our entry there. So far the pullbacks are still coming in. We're still seeing a lot of strong sellers on the sell side, very strong sell, a little bit of buyers, but nothing really to show for. Okay, and then still we have very strong sellers coming to the downside. So what I'm trying to look for here is show me signs that buyers are back, okay, and show me signs that sellers are getting weaker. So let's see how far this sell can go. Now look at how each move is slightly different. Okay, so this traveled this far. On the next swing, it traveled much further, but it took a long time, didn't it? What about the next swing? Now this one is getting a lot smaller now, and we are barely making lower lows, right? And one more thing to add to this, we're coming back to the previous session high. It may be acting as a support. So let's see at this area here if we do get buyers getting stronger. See buyers completely devouring the move from the sells. Okay, it's much stronger now. Let's see, let's wait for some type of sideways hold, and that's gonna tell us that we can get in. If price is able to hold here. Okay, so seeing that price is holding here, this does look like a perfect time for entry. All right, we will set up the trade as so. We would be getting in around here. Stop loss would be at the recent low, and then we're taking profit around the recent high. So this would give us around a 1.5 hour trade, which is not too shabby for a simple trade. Let's get in and let's see how fast we can reach the resolution. All right, so we're seeing price holding here. If the entry is right, we shouldn't see a huge drawdown. At least the level should hold. We see a bit of launch here. We see some pullback coming in. Immediately feedback from the buyers. It's still holding grounds. We broke the high, and now let's see if we can reach target. Right, we're still holding grounds here. Let's see if we can reach target in time. Almost there, and there we go. Now, trading is really about consistency, not screen time. You can avoid common mistakes, trade with discipline, and most importantly, you're setting yourself up for success. So I hope you liked this video. Make sure to like and subscribe if you haven't already. Otherwise, I'll catch you on the next one. Cheers. Bye for now.